Welcome back to the Commercial Real Estate Show. I'm Michael Bull. Today our show is Lodging Industry 2017. We have Mark Woodruff here with us in Studio One. He's head of lodging research with CBRE Hotels. And Mark, what are some markets around the country that are doing well or maybe not so doing well?
Let's take the happy ones first, I guess.
I like that.
Coastal markets in general have been and are doing and will continue to do very, very well. San Francisco, now Oakland, is doing phenomenally well. Los Angeles, Orange County, the numbers just continue to be very, very attractive. You have places like Miami doing very, very well. Boston, strong, and so forth. Really, the only non-coastal market that continues to do just terrific, there's just a few, San Antonio and Nashville. And are just powering ahead of where they've ever been before. On the other side, we do have a number of the energy markets, not surprisingly, that aren't doing so well. The poster child there would certainly be Houston, where it's now living through the double whammy of they had lots of new rooms that have come in and are coming in, but yet on the demand side of the equation, there's been a very significant pullback because of the oil issues and energy in general being very, very soft. So there's Pittsburgh is one of the weaker markets. That's a little bit of the economy. They benefit a lot from the shale fracking phenomena of 5-6 years ago, and they had a lot of new supply. So again, they're like Houston. They're getting it on both sides. Lastly, I'd be remiss to not mention New York, in that it's interesting in that New York has gone through a level of new supply growth that far outstrips anything we've ever seen historically in that particular market. Added to that, the level of Airbnb supply, which has come into that market over the past 5 years, that's significant, to the point where it took 2 or 3 years for the market to return to its previous peak in terms of occupancy, but room rates, in real terms, forget inflation, in real terms, room rates are still 17-18% below their previous peak in New York.
Wow.
So the economic fundamentals of that market are very, very challenged today.
Do you think the increase in the Airbnb space in New York took some of those developers maybe by surprise when they were in the planning stages?
I'd have to believe the answer to that is yes. Yeah. It's a phenomenon that I think a lot of people really underestimated, just the scale that it could get to, and perhaps even more importantly, the appeal that to the typical consumer that Airbnb or again some of these other sharing economy firms, the products that they have to offer.
Yeah. What do you see for foreign investors? I'm going to talk investment properties all the time, but foreign visitors coming to the U.S. and the impact. Sure. Yeah. What do you see there?
There's been a big headwind on that source of travel, which in some markets has been a very important one. For example, you take the gateway cities, whether that's New York, San Francisco, L.A., Miami, particularly coming from South America. That strong dollar has really hurt the level of inbound travel to the States. And that's contributed to some of the weakness we've seen in some of those gateway cities.
That's interesting. All right, well, stay with us. We're going to have more from Mark on the Lodging Industry 2017. I'm Michael Bull. This is the Commercial Real Estate Show. Stay with us. Hey there, thanks for checking out the Commercial Real Estate Show. Don't miss a video of special interest to you. Be sure to subscribe below. And if you appreciate the videos, be sure and thank our sponsors. There's a link to more information about them in the description. For more videos, podcasts, and articles, check out creshow.com.